But what's happening with the economy? What's happening with the globe? What's the view on India from a long-term perspective? Kunal Kapoor, Global CEO at Morningstar, joins us right here in the studios. Kunal, morning. Great to have you with us.
Thanks
right here in Mumbai. But tell me, what's the bird's eye long-term view on? Because, you know, while on one end there is the chatter about the economic slowdown, the government's doing its bit, started off with the corporate tax cut slashes, reforms for the real estate segment, disinvestment, and it seems like that's not done. Seems like there's a lot more in the pipeline.
Yeah. I mean, so I think the path is good.
Yeah.
And I mean, it just shows also the amount of work that needs to be done to kind of get to where you need to be. So I think India's done a lot of the right things. But obviously, just as you're seeing around the world, there's a pretty big slowdown that's taken place in the manufacturing economy around the world, and you're seeing the impact of that here. Now, I think what's interesting is when you look at the Indian data, it reflects more so a localized issue as opposed to a global issue. So you certainly have the China-US trade war that's impacting some markets like the US and China very materially. And you definitely see that in India you've had an export slowdown, but you've also had a domestic slowdown, which is, I think, what the government is trying to contend with more fully.
So where does India kind of sit when it comes to the map amongst other key global markets currently? We've seen a resumption of fund flows. Is that just on a better environment, you know, on Wall Street post the trade issues having kind of gone into the background and perhaps those markets looking too expensive? Are we still falling behind other emerging markets?
Yeah, I mean, I think there's a little bit on both sides. I mean, clearly we're living in a world today where a few headlines tend to drive flows. I think for better or worse, we are definitely seeing that. And, you know, one day there's a trade agreement, the next day there's not one, and that tends to drive a lot of interest. I think with India, the big challenge, if you are a FII, is that while the markets are, you know, at a continued sort of strong pace and have hit highs, the currency has been weak. And so certainly from the perspective of someone who would be in a rupee account, it's gone well. But someone who, let's say, has been in a dollar-based account, it's less well. And so when you think about the Indian markets and other emerging markets, you can't just look at it from the perspective of the actual returns. You have to look at the currency impact as well. And that's certainly been negative, for India off late.
Yeah, that it has been. Talking about what's happening in the western part of the world, and just wanted to understand really how the West and East are going to meet. It seems like there is going to be a truce very soon between US and China. Seems like things are headed in the right way, but it's not done till it's done, and till it's signed. A peace accord is signed on the dotted lines. Which way do you think this entire situation is panning out, and whether or not India can really derive benefit if indeed China were to lose?
Yeah. Well, your guess is as good as mine, if I have to be candid. But, you know, one way I would think about it is that the trade war has been going on now for a few years. And if you look at whether there have been viable alternatives that have emerged in a meaningful way in the short run, the answer is no. And what I would say that it's been less about a shift from one emerging market to the next. Clearly there's been some aspect of it. I think the bigger issue is that there's a realignment away from this notion of global trade being a great thing. And you're seeing more and more governments nationalize all over the world and put a focus, including in India and the US, on trying to do things locally. So I don't know if that's going to mean a willingness to pick up and shift from one market to the next, as has been the case. In fact, I would venture to suggest that in the short run, you might see more and more attempts to do things closer to home than ever before.
So, you know, as you said, headlines help to kind of, decide market mood. And we have seen the government here make all the right noises. We had Ray Dalio speak out last week talking about how, he perceived the Prime Minister was very active in taking, the right risks and new policies and so forth. But do you actually see value currently when it comes to, the markets, in terms of you have to pick up something right now?
Yeah. The way I would suggest in terms of the Indian market, the way we look at it is I just look to what our analysts are doing right now. And so our analysts, when they put together portfolios today, are undervalued. They are under the benchmark when it comes to Indian exposure. And particularly had been underweight in certain smaller and mid-cap parts of the markets. Now, obviously, those have corrected a little bit, and so our analysts have been indicating that they're adding back a little bit. But certainly, if you look at it from a global perspective, our analysts are not saying that India is particularly favorably positioned from a valuation perspective.
Okay. And are there certain themes, I know you don't want to talk sectors particularly, but themes, like in the sense, whether it be consumption, whether it be cyclicals, based on whether or not you feel the slowdown here has been cyclical or far more longer reaching, you know, would there be a certain strategy with which you'd approach India?
So one of the things that always surprises me in India is when you look at the holding period. And what I mean by that is how long people invest for certain things. People are constantly trading, trading stocks, trading funds, and that I think is not necessarily the right approach, right? So ultimately, India has a positive aspect of having this demographic dividend that's bringing more people into the workforce, giving them an opportunity to contribute, which if you're a company that's, you know, ultimately dependent on the Indian economy, Indian consumer, in the long run, that should be a positive for you. And so from my perspective, you have this great opportunity in India to identify good companies at reasonable prices and just own them. Or identify good mutual funds where you're comfortable with the process, understand what it is, and just own it for a long run. And so that's kind of how I think about investing in India. I think because it has good long-term macroeconomic factors, I would suggest not to get too caught up in the short-run economic factors and just to be disciplined in the way that you approach investing in the markets, because it does work over the long haul to be disciplined in that way.
Sure. You know, talking about that, Kunal, it's interesting that you say that, because, you know, some of us in the studio were just chatting about as to how 90s was the beginning of the IT boom. It was when the Infosys, HCL Technologies and Wipros of the world were formed and the world discovered them. You know, then came some of the old economy cyclical names which really rang the cycle. Then came the consumption boom in the country in the early 20s, and you know, the last 5 years have really seen the financialization theme really come to the fore. Do you think that the next big set of movers will come from the financialization, you know, the unorganized sector coming to the organized sector as part of the financial sphere? Or do you think there will be a newer sector or theme which is going to dominate investment?
Yeah, I mean, it's a fair question. And when I look at our research and what our analysts are saying, I think we can all agree that the way technology is impacting every industry is critical today when you're doing any analysis, right? And so our analysts will tell you that the exciting companies and the ones that are worth keeping an eye on aren't necessarily always the ones that invent technology, but it's the ones that are using technology to transform the way they do their business. And so that is included in the financial sector, right, where you have complete digitization taking place, you have people changing the way they provide experiences, whereas once you might have needed to go into your financial institution, you may not need to do that in the future. You can do that all on your phone. So I think all these are exciting things. And if I'm an investor, the question I'm asking is less sector focused and more focused on, off the companies I like, what is the opportunity for them to transform their business using technology? And you know, even in old economy sectors like agriculture, you have some fascinating things that are happening that can really change the trajectory for companies long term. Because ultimately, like, the stock market is fundamentally what it is it's basically trying to provide prices based on a company's ability to grow in the long run, right? So you're just kind of discounting it back.
So are manifold returns still possible? Or are you moderating return expectations?
I think it's always good to have moderate expectations. And you particularly should have moderate expectations after such a strong run around the world. I mean, the reality is that despite all the noise around the world in the past 3 years, equity returns, fixed income returns have been strong, with the possible exception of Europe, which has been much weaker.
Okay, Kunal, great to have you in the studios. Thank you so much
thanks for having me.
Dropping by. That's the word coming in from the house of Morningstar. Quick look at what the market is.